All right, hi guys. Sorry, I've been really busy out working on some exciting stuff, but also the reason why I haven't posted it because I haven't really done anything. But this is going to be an important post because I'm going to go over a couple things that I screwed up on, and as well as what I'm going to do now when I'm rolling. All right, so first things first, let me get over the screw ups part. Remember how I did if you look back at some of the older recordings, I did like I think on this FXC and the VXX, I did a Hono Hono trade, which basically is a synthetic straddle. Um, and if you go back, shoot, you can go back. Basically, what that is I was selling stuff like really close to the strikes. So if you go here, it should be real close because I didn't really. Um, just go back from here, from page 111, just hit previous and scroll. You'll see like rolling. Just go back. You'll see what I did in FXC and VXX. It's in here somewhere. Anyway, but I screwed up because what I did was it had defined risk, but the position closed on in between my two strikes. So here's what I mean by that. Let me see if I can. I think it's best to just find it. What is this? Go like this. My bad, my bad. Hold on. I don't know. God, I do so many posts sometimes I forgot where they are. Anyway, these were on kind of a while. Crap. I'll just show you an example of what I did. But anyway, whenever you have a position like this, and I'll do a sample one here. Let's go trade. Okay, so I'll zoom in just for shits and giggles. Anyway, so what I did was I did something like this. Go to strategies, go to Iron Condor, whatever, right? Yeah, it's about right. Okay, so what I did was I did something like this. Oh, whoops. Okay, so I did something like this. Okay, like then I'll just move my strikes like this. Okay, I did something like this. Whoops. Okay, I did something like this. Okay, so I bet. See the green area? I was betting that the SPY will stay between these strikes. Okay, and the reason why you can do that is sometimes when IB rank is high like this, you can collect a lot of money. Okay, so this increases your break even. So even though I'm selling the 195.5 put and the 205.5 call, so I'm betting it'll stay between those numbers. If you can see, I'm still green if it goes way below that. See down here to here, it's still profitable. Why? Because of the higher IV rank, so you can collect more money, so that it expands your break even point. The problem is what I forgot was, so I just let it expire. I didn't do anything. But what happened was it uh it finished below. I think it was like if the price finished between my selling the put and selling the call. I'm sorry. God, I'm saying this wrong. My position finished like over here. It was in between where I sold the put and then where I bought the put. Okay. So even though it was defined risk, I got basically what happened was I got put to position, meaning now I own X amount of shares of that underlying. Okay, so you become long that position. Okay, because I wasn't watching, I was so busy. With this account, I'm not really watching it. It's kind of like my fun. I just set this up for the experiment, but I f that up. So don't do that. If your position is going to expire, right, and it's between these two strikes, so like around here, just close it. Don't let it expire. Just close it. You'll save money and you won't get put to position. So anyway, so what happened was, because I didn't do that for these two, I own these as stocks. See, these are not options. I actually own them. Okay, that's why it says 50% over here. So basically, what that means is I'm betting that, and the reason why I didn't mind that so much is I was just betting because FXC is at a real low extreme. I'm betting that this will go higher. And of course, at the time, VIX was so low, so now I'm betting that VIX will go higher. So see, I'm actually up on this. okay, on this trade. So I can actually close it, but I'm still betting that the market will go lower and this will go higher. So I'm keeping it. And this I'm only down 99 bucks. So what do I care? I'm going to keep it. So, okay, so that's lesson number one. All right. Okay, now in my SPY positions, I'm going to expand this up. I mean, as you can see, I'm up like, oh crap, this is almost freaking weird. Okay, anyway, as you can see, I'm up I don't know, 1,000 something dollars in this, right? Today was up 343. So anyway, I'm gonna roll positions because look, I only have 4 more days left. So I'm gonna roll all the positions I'm in trouble in. So for example, right now the SPY's at 199.51. So for example, see this one, I'm short the 206 call. I'm just gonna let that expire because that'll expire as a winner, right? So I'm just gonna go through my positions. Now, unfortunately, though, it doesn't let me group things right, so it kind of got screwed up. So I'm going to go into Thinkorswim and show you that as well. But basically, all I can do is because I grouped it this way, I'm just kind of looking at all my calls, what I'm in trouble. See, look, see right here, I'm in trouble on this one, 189, because I don't know if it's going to get dropped 10 more points in 4 days, right? So for example, this one I'll roll. All right, so I'll roll it till January. How you do that is you can click these two things right here, click roll, okay, and then you're gonna pick a new um, expiration date. So all I'm gonna do is I want to keep the same strikes, okay, but I'm just gonna roll it to January. So these lines right here is the 4 days. That's when it's gonna. That's the current position. The outer ones are what I'm gonna roll to. So what I want to do is I want to change the expiration right here for this to say January and where there's no W because I want a normal options. I don't want weeklies or whatever. See, that's Q for quarterlies. I don't want that. So I'm going to keep on going until I get January. See, that's a W. I don't want weeklies. I want to change it to, yeah, there, blank. Perfect. See? So I can roll it for, oh, but the problem is it's for a $1.38 debit, okay, which is not good. I want to be able to roll it for a credit. All right. So, oh, wait, that's not the same strikes, though. Hold on. Let me clear this in and try again. Where's clear? Sorry, they changed here. Clear. So I'm gonna go like this and I'll double check again. What? December 189, 195. And I'm gonna roll it. So let's see what happens. Okay, that's right. So let's see what happens if I roll it. Okay, look, technically I could roll it for, what does this cost me? 6 cents. So it'll cost me, no, it cost me what? $1.50 a trade. So that's um if I roll this, it'll be $1.50 on each one. So $3, $6. So $6 is 60 6 cents. Okay. Um so technically I could just roll it out a week, okay, and I can still collect credit and this adds on to my original position and I'm still okay. So I'm just gonna 189, 195. Okay, good. I want to keep these the same. So remember that I'm selling the 189 and I'm buying the 195 call. So I'm gonna hit this once and see what happens. 189, 195. That's a debit already. That's not good. See what happens here. Nope. See how it jumped to 190? So I want to change this back down to the 180. There isn't. See what happened was in this weekly there isn't a 189 call. So I couldn't select it. That's why. So go like this to the January 9 weekly and let's check. No, see there isn't one. So click again. This is January normal. There is no 180. Ooh, wait, there is. See, change it to 189. There we go. 189, 195 call. Okay, so I'm gonna roll it to that. But it'll be a 50% debit, so I have to pay 50 cents to do it. I don't really want to do that. So what can I do? I think just to be safe, I can either, what I can do is I can close this position for a loss, okay, or because the strikes are so close, or I can just roll it for 11 cents. Okay, so let's try that. I'll clear this. Hold on, see, because this usually, I think this is paired with a put side. So if as long as I can close both for a net profit. See, I'm up $9. See this right here for this position? I'm up $9. I could technically just close it and freaking make it a wash. Call it a scratch, really. Okay. Let's see what else I got. Where are we at? SPY is at, where's the SPY? The SPY is at 199. So see, that's when I'm in trouble. Look, but the funny thing is, look, I'm in here. Oh, here's a neat thing. Look, I'm way above this, right? But how come it's still a profit? Because IB rank, um, I guess has dropped since that time, and that's basically how they're pricing it. Here's another. Oh God, this is the screwed up part. This is the other side of this trade, I believe. See the put side. Of course, these are all winners, because yeah, everything finished. They're finishing above 197. Wait, hold on. Okay, the reason why this is being tested is look, we're at 199 here, and it's already at 177. There's another part here I gotta fix. 3, 4, 5, 6. See that the grouping got screwed up, so I'm gonna check and toss again. So because the grouping is kind of screwed up, go to toss and I can show you how to fix it. So here's my statement. Here's the same thing here. Let me see if I can. Long story short, I'm just looking for stuff that's in the money. So of course, let's look for what's in trouble. You can tell right here, right? So anything that's negative, I'm in trouble. So this 197 put, it expires in 4 days. Because if I'm thinking it'll go longer, I might have to roll this once. See, I have to roll this right here. See, I don't know what it's paired with. These are all verticals. They were golden geckos, but they got paired separate when I rolled them. Um, Anyway, also all I'm going to do real quick, I'm just going to look for the ones that are being tested. I don't care about the... Wait a minute, what is this? The call. It's technically it's in the money, but I'm still up 65.85%. So see if as long as they're so you know what, tomorrow I'm actually going to close a lot of my winners and I'm going to roll all my losers. So anything that's positive, I'm just going to close it. I'll just buy back for a profit. See this one, this one, this one, right? 60%. I'm going to close all that for a profit. All these other ones that are negative 10% like this, the 197 put, I'll roll. Okay, I'll just show you how to do it in Thinkorswim and toss. Click on this, create rolling order, and I can roll it to whenever. You can change it later. So let's say I collect, and I just want to change it to January. Look what happens. Vertical roll, boom. It brings it up over here. So, and then you can change it. See, I can roll it for a credit. So I can just hit confirm and send, and it'll go for 18 cents credit. This will cost me what? $6 to $3 to go out, $3 to go in, $6, which is 6 cents. This is 18 cents, triple that. So I should be fine. You see what I mean? And I can actually roll this out to December. It's a vertical roll. I'm rolling to December, the last week of December, basically. Okay, which is why I kind of like Dough better, because you can see it better. Okay, so let me try that again so you can see it. Click this blue dot, create rolling order. You're gonna buy back the vertical, and you're gonna roll it. So you're buying the December 14th one, the 197, 192, and it automatically. Oh, I'm sorry, not create rolling order. So here it is. I'm gonna sell the weeklies. So this one right here, December 4th, 14 is what I'm gonna sell. So basically, the negative sign means selling. So I'm selling this, and I'm buying these back. Okay, so I'm closing this one. I'm buying back this 197, and I'm reselling it up here for 18 cents credit. Okay, so let me show you how that looks like in Dough real quick before I run out of time, and I'll do another video real quick. I'm gonna run out of time in 30 seconds. But in Dough, that one is the 197. Yeah, right here, custom grouping. I would have to go like this, and then create rolling. All right, just like that. And then I've got to do the quantity. So I've got to adjust the quantity right here. So you can tell the quantity by going like this and like this, but it's just one. See right here? You can double click it and change the quantity. All right, I'll continue this in a new video.